Let's talk startup costs. So startup costs are the expenses you incur in the process of creating a new business. So it's really important when you're creating your business that you are tracking these expenses, whether it's in QuickBooks, Excel, pencil and paper, regardless, track it. And I'm gonna tell you why. So let's say you are considering starting a business selling masks. Okay, so let's say you buy a sewing machine. You buy a sewing machine for $2,000, right? And then you buy materials, like the yarn, the strings for like $3,000, okay? And then let's say you also took some type of course to help you sell these masks. So let's say this course was our education. Let's say that education piece was $10,000. Okay. So if we add all these up, the sewing machine, the materials, and the education course, we have $10,000, or $15,000 in startup costs. Now, the IRS allows us to deduct the first $5,000 on our startup costs. So we take this first $5K, and when we file our tax return, we're allowed to take that deduction. Now the rest of it, which will be $10K, that gets spread out over the course of 15 years. Now, let's say your business ends before that 15-year period, you can deduct it at that point. But it's really important when you have startup costs that you remember you can't deduct that full cost. It has to be spread out over 15 years, but you're allowed to take the first $5,000 with certain rules and stimulations. So be very careful when you're starting a business. Make sure you track your expenses, get very good at bookkeeping, and take care. So that's startup costs.